let's get started for the poll report. It is 9 o'clock on the 15th of March. Um, Pretty indecisive week. We had some choppiness yesterday. We had the dollar strong. We'll see where things lead us today. Big news next week on the FOMC. We're coming up to towards the end of the month and quarterly expirations. So things will likely be moving. I think that March typically, historically, shows some struggles and some bearishness. We haven't had it yet. We've had some struggles to the upside, but we're not going anywhere yet. So I think that as we've been kind of pounding the pavement on some corrections, we're likely going to see them. It's just a matter of if we have the timing right into next Friday, possibly the week after, as the expirations are coming up on the 22nd, 29th. Obviously, with your index options, you can look at those every single day. So big expirations I'm watching. 22nd, which gets us through FOMC next week. We had CPI and PPI data this week. The 27th and 28th would be final run up for expirations going into the end of March. March 28th is your Q1 expiration window. All right. So before we begin, we know there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. All right. Let me pop up the chat. Say good morning to everybody. Good morning, traders. Good morning, everybody. Ruth Ann, good morning. Benji just chilling out on the couch. Chris, good morning. Dave, good morning. What's happening? Currency strength chart yesterday. Dollar from about 9 a.m. strong on the day. Everything else quiet. You can see that in the price action. I'll go to the charts in just a moment. Go to today. Downside, New Zealand dollar, which helps our Euro New Zealand. Helps our pound New Zealand. Does not help our Aussie New Zealand. We'll take a look at that one, but also helps our New Zealand dollar. I'm still holding those positions with dollar basket. I'm looking for some strength. I'm getting a little bit. The yen also poked up here around 3 o'clock a.m. Eastern time, popped up strong, and then has faded since that peak right around 3 a.m. So we have New Zealand weak, Japanese yen weak, and Aussie weak. Swiss on top, euro, CAD, dollar, and pound just above the baseline and zero line. Here's the dollar index. This was the daily move yesterday, a little bit of a pop-up. Conflicting patterns. It still is a little indecisive to me. This level versus, I'll just draw it out. I initially, I've been looking for dollar strength to see if this is going to be a crown pattern. Left tip, center tip, right tip. We're looking for a push to the upside. Okay. Also, we have this low, left tip, center tip, right tip. So it is still a bit of a toss up on the dollar, with FOMC coming next week. I guess we'll look and see, maybe this little spike that we had this week, this would have been Friday, Thursday, Wednesday, Tuesday, Monday. So last Friday, so literally a week ago, do we break this low? Do we break this high? Is this kind of the tricky spot to be trading the dollar? We shall find out. Bill, good morning. Ron, good morning. Rev, good morning. Nice to see everybody. So dollar index right there. Let's go oil, gold, silver. Oil continues to go up, which is good. That's a position I have on some crude oil futures, which is great. Just some out of the money bull put spreads looking pretty good. And like the positioning there. Still looking to stay pretty bullish. We can have some pullbacks. It is a little strange to see that price is cooperating so nicely in oil. So I do wonder that, with this recent run up here, if we're starting to see possibly a break of the channel or a little bit more of a rev up on the bullish side. But directionally, I am still looking for bullishness. Doesn't mean that we can't have a complete, breakdown of oil, but that looks unlikely at the moment. Inflation has proven this week that it's a little bit stickier. If you go to the calendar, this is next week with FOMC. Still no forecast, I don't believe. Forecast will probably be on Monday. Expected to change, or expected to be a pause for the Fed. So here was our CPI data this week. Monthly came in 1/10 higher, and year over year came in 1/10 higher than forecast. And then PPI also came in a little bit hotter. Producer price index 0.3 higher. Retail sales revision was worse off and negative, and came in worse than expected for core retail sales. Core PPI came in 1/10 higher as well. Unemployment claims 200K, revised from 217 to 210 for last month's print. And then today we have our U of M sentiment report. Let's check the fear and greed index really quickly. It's probably faded from extreme to just normal greed. Yep. So we were up as high as 79 not that long ago. Let's check the other things. Market momentum, still extreme greed. I mean, this is just looking for that structure right there. I'm still bullish overall. I think we need to have a bit of a cleanse, call it 3, 5, 7%, call it 8 to 10% kind of worst case. But given the election year and given kind of the political motivation to keep things stable, we still don't know what the Fed's ultimately going to do. Expectations have changed quite a bit from 6 or 7 rate cuts to maybe 2 or 3. And I I mean, I see arguments for both sides of it. We're certainly not having 7 rate cuts. I think right now the question is, are we having any? Are we having one in the summer and maybe 1 or 2 more by the end of the year as we head into contentious elections for all intents and purposes, or are we going to have 0 because inflation's still high? But there's kind of this interesting dichotomy with the Fed. Is the Fed going to focus on growth and GDP and just deal with higher inflation and keep rates higher for longer? Um, or are they going to focus on inflation, keep rates higher for longer, and just make sure that they are suppressing, restricting, and possibly doing some type of damage? You know, it's a tough situation. I think it could be the argument could be made that the Fed is in between rock and a hard place, as they say, because I don't know what is the best solution. I don't know if there's the soft landing, hard landing, no landing scenario, but it's going to be something. And also listen to some interesting content last night that if the Fed has to act, I mean, everyone has seen the Fed basically step in and be a backstop. Let's just talk about the last 5 years, 2020 with the COVID crash. Look, things were happening under the hood that I was bearish going into 2020. COVID, was known in January of that year. It just became the excuse that the market jumped around or jumped into when it came to that big plummet in February and March. But what happened? Fed backstop. What happened to regional banks in 2022? Fed backstop, right? So, or was that even last year? I think the Fed, the backstop from Signature Bank in Silicon Valley and First Republic, and it was like 2 or 3 banks, one of the largest on record, and it was Fed backstop. Not just the Fed, but other banks as well, like J.P. Morgan Chase stepped up, and other central bank or other large investment banks. So anyway, I do wonder this year if something does happen, something does break. Um, maybe maybe it's China, maybe it's Japan, right? I mean, Japan's monetary policy could be just a tsunami type event. Not literally, but I mean, like, financially, we have something where it is the unraveling of this carry trade environment, which, again, I keep saying this, it seems very quick if the unraveling is happening this year. But obviously, with monetary policy, if the BOJ doesn't shift this year, we obviously wonder when will they do it? I mean, they've been the one central bank on record that's been the most kind of radical negative interest rates for over a decade, and they've had fixed bond rates and things like that. So I mean, their Nikkei is up 1% for the last 34 years, but obviously the last 14, 15 years it's done pretty well. It still failed to outperform the U.S. markets. But it's been ripping this year. Is up. I mean, the Nikkei is up what out of the gates for the year. Let's go NIK 225 or NI 225. There. So we've had a bit of a pullback. Let's go to the weekly chart here. So we're right back to all-time highs on the Nikkei. We've obviously had a great run out of the gates to start the year. I think we're still up double digits. Let's go to January. This is the weekly chart. So here is, yep. So here's your first week of January. Take that low, take the high. You were up as much as 23.6% to the highs. We faded that back down to about 18. Still pretty solid, obviously. And if we go into sector watch for the U.S., S&P index broadly, I think we're up double digits now. Got to be close. So 7.98 on the S&P. Communication services, energy making an interesting run. Financials doing pretty well. Um, Financials probably led by Berkshire Hathaway, which has basically been in lockstep, actually doubling performance of the S&P. Berkshire is up like 15 to 16% for the year. It's one of the largest holdings. There you go. Berkshire is up 13.17. JP Morgan, also a big one that's running higher, 9.67. Visa's up, MasterCard's up. So financials doing pretty well. Healthcare making a solid run. So look, broader market. I mean, this is year to date. Broad market's doing pretty well. I don't want to say that. The large index weighting of the sectors are doing well. For the most part, the S&P 500 is highly concentrated with large cap. Right now, the momentum is all in semiconductors and AI and hype. Away from a bit of the Mag 7 into like the Mag 2, and that's Nvidia and Meta. Microsoft hit all-time highs yesterday as well, so it's hanging in there, obviously doing well. Apple's bounced off the lows, Google's bounced off the lows, Tesla's still getting his butt kicked. So anyway, it's going to be interesting. So take a look at the charts. This is the structure. It's not that difficult, right? If the floor falls out, there's going to be a correction. How far, how deep? I look back to the all-time highs. I mean, that's a close to double-digit correction from the highs, right? Close to it. It's about 8%. I think that's a fair, level to number one. If we get a correction, okay, we get that correction, awesome. Um, I'm still looking long from there. I think there's enough to keep the markets motivated. I think that the buyers are eager to step back in. We certainly have more of a risk-on environment than we've had in the past. A lot different than 2022, and a little bit more concentrated than 2023. So anyway, that's where we're at on the SPY. We're trading pre-market down about 512, so that is down about $2. Let's take a look at the futures market. So futures. That is interesting. Stock market futures continue to point to gains after that's an old headline. Let's go to recent. March fall off. Well, we're running out of time there, New York Fed. If March fall off is about to happen, we have 2 weeks. And Good Friday on the 29th isn't even a trading day. So we have, just under 2 weeks of trading. I am positioned for this. I have some puts out to the 28th. I've got some puts out to April 5th. We have some puts out to the 22nd. So we're certainly taking some stabs. Interesting article here. Top uranium producer expects modest production growth this year. Well, that's good. I think I like uranium as a whole, as far as maybe some clean energy in the future for nuclear. Anyway, futures market. Dow up slightly, 0.1%. S&P off the lows. Nasdaq falling a little bit. Gold 2165, but retracing. Silver 2535 up, and oil up. Let's take a look at all those. Okay, so your S&P 512 pre-market. Let's go to the daily chart. There's really not a lot to make of this today outside of, I mean, yesterday was a red day the entire day and then fought back really hard the last like 60 minutes of trading. If we, fade off of that or fill this gap and then start to look to go into next week's FOMC a little bit vulnerable as far as price action, I would be, well, I mean, for me in my put positions, if we get below 510, 510 to possibly fill that Nvidia price gap around 497, to me, I'd be very happy with that. I have a 508 by 495. If we get close to that level, 497, 498 is where that Nvidia gap is. So that could give us 10 to 11 bucks on the put side, make up for the debits around 650 or 670. So hopefully we start to see some direction. And if we don't, I've got a 512 by 525 to the upside. I'm also looking to price out some of my quadruple diagonals. This is kind of a double diagonal spread in a unique way where I can position myself around the center of the SPX, try to see some volatility one way or the other, anywhere between like 50 to 75 points, and give myself some profit over the next couple of weeks. So I'll look to position for that in the SPX. We took some stabs at the SPY, the Qs, the DIA. I'm also right now long on the Russell, which has pulled back a little bit, which is totally fine. I mean, a pullback is good, and I'm looking to see, maybe it pulls back slightly more. We pull back into like this 195, 190 zone. I still like the Russell for a long position going into, this year to see if small caps continue to catch up. CAF. I thought this was. Let's see. That's not it. There was something with an ETF that was supposed to be like small caps, S&P small caps that have like positive cash flow, but I'm not seeing that right now. Maybe maybe I misheard that ticker, so I'll try to find this one. But IWM pulling back, IWX, which is the top 200 of the Russell, also looking to pull back slightly. And let's go to our DIA. DIA is looking a little bit closer for some rolling over. We're flirting with this level here. If the DIA breaks below 385, I would say there's certainly some more pressure to the downside for that floor to break if we are struggling at these highs. So the DIA might be rolling over here, and I want to be braced for it. I think if we have a March cleanse, I still think April, May, the market picks itself back up, and we go into summer with a decent trend. And it's likely going to stay that way until the Fed starts getting more vocal about what they're going to do action wise, if and when they cut rates. I mean, next week's going to be a pause, but language and narrative and press conference will be important to watch, obviously. So down pre-market on all the major indexes for the US. Let's go oil and gold and silver. Oil we did earlier, right? We're up around $80, $81. Gold, after its big run, we've had a bit of a pause. This to me is actually pretty encouraging to see that the bulls are still maintaining control. I think they're just waiting for a bit of a buy. Pound Aussie still holding. Yes, I'm still holding Pound Aussie long. I'm still holding Pound New Zealand long. Yep. We'll take a look at those. Good question. So I like the fib levels on gold. I still think that a 236 to a 382 window look pretty promising. If we have a deeper pullback, you have your previous highs and breakout levels around this 50618. If this runs with an aggressive market, if we hit the 382, then I'm looking much, much, much higher. This is the halfway point as far as 2271. If we go to the full measurement, it's around 2470. So I still like staying long on gold. I just hope I give it enough time. Right now, a lot of my gold positions are out till March. Silver, and silver's up to 25 and change. I might just have to do some long calls on silver, which I'll take a look at today. I think I just have some bull put spreads running right now. Let me check here. SLV is this. I did some deep in the money calls at 20, selling at 26. Yeah, those are fine. Okay. Those are some out of the money positions. Let me see what I put on. I know I paid for the call options. Obviously, my goal is to sell against those. So my calls go out to January. So it's essentially just shy of a leap, give myself some runway for some bullishness. And then I'm going to sell hopefully every, 30 to 45 days and sell something like, 10, 15 delta call that's against that to lower the cost basis. So let me see my tracker here for SLV. Let me look. There it is. Okay, so I had some debits in there, SLV debits. And I have 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6. Perfect. So I've got everybody in this, which is nice. Okay, and collected about 10 to 11 cents per. All right, I just have to get these in. Okay, just updating my spreadsheets. There we go. Okay, so that's my take on silver. So the good thing is I'm participating. In my account, I just had an iron condor that I closed. I had a bear call spread here, bull put spread here. Price has been creeping up a little bit higher. I had about $50 max profit. I closed it out for 40. I also had on SLV a strangle that I took off for profit. and it's good because my strangle sell or the sell call was 23, and we're trading pre-market at 23.03. So could be getting much closer to some SLV love to the upside. So $20 call and 26 is the April. If this obviously starts to push higher, I'm going to get it out of the way. Philip Morris, little boring trade, but I do have some calls I'm considering a roll on. We have dividends coming next week on Friday, which hopefully is going to be up to this 98-cent level. That'll give me some nice income for the ownership that I have. If we have a dip on this, that would be helpful. Otherwise, I'm looking to roll, which I'll take a look at these today. I'm going to look to roll up some $42 and $43 calls, possibly rolling them up to 45. It's going to be a bit of a debit to do that, but if I increase my profit by $3 and I only have to pay like $1.50, $1.70 to roll that, I can take that net profit if it still gets called away at 45, which I don't mind. Technically speaking, I would like to see MO head up towards 48 and be long until then, and just trying to position for that. So this has had a pretty good run. It's had a great run actually, and I've been mostly positioned around this 41 to 40, 40 to $41 level. But I don't want it to get called away right now. I'd like to give it some more upside room, and so it might inquire or might require another roll to do that. So I'll take a look at that today. Um, Anything else in the stock side? Things are looking fine. The only thing I'll have to make an adjustment on, there are two stocks that were kind of threatening me a little bit this week. Tesla trading at 162 again, oversold conditions on the daily. Hanging in there with some, in the money or out of the money bull put spreads. These are all threatening my Schwab account. I have some lower levels in this Tasty account. Let's go to Tesla. So I've got the 160 by 155. They're down a little bit because they were out of the money, and so the deltas have changed, obviously. But right now they're still being defended. Apple, we're at 173. Google, and I have some like 170s on Apple. Google was 130 and 125, but now it's at 143. So those have been out of the way. Boeing was one that was also threatened. The 185 by 180 and a 180 by 175. We're trading, 181. I'm going to look to see if there's a little bit of a retracement there to maybe mitigate some of that risk, but everything else is looking pretty decent. So let's see here. YUMC had some exposure there. WBA, USO looking fine. Uranium, some call options. That's actually that's a reverse J lizard out to April. Okay. Tesla, those are fine for right now, but Tesla's still getting beat up a little bit. AT&T, long calls and a naked put. All right. Anyway, things are looking fine. But like I said, MO, it's one of my better performers for right now, and it's up about 15K. And I want to see if I can get rid of these calls are in the money, and this goes out to next Thursday. So I'm going to take a look at these today because we only have about 13 days left in the calendar for expiration. I'm looking at a roll. It's going to be a debit, but I'm going to try to move it up towards 45 and see if I can maintain that the stock doesn't get called away. With the dividend, we should have a pullback on that. So the roll would be in my favor. It's going to be annoying to increase my cost basis. However, I can still, sell puts and consider doing some strangles. But now that we've had a decent jump out of the gates for MO, I don't necessarily want to get in the way of that. So I'm going to be a little bit pickier on, covering this. The hard part is this stock doesn't offer a lot of premium because it's typically a low beta and a high dividend stock. But I think there's good runway up here towards, $48. If we have any pullbacks, I might look at, I don't know if I want to do call options unless I go out to the end of the year and they're cheap. But otherwise, I'll just continue to hang on to the stocks. Okay, let's switch over to some currencies. Aussie CAD. Yesterday's session for Flex was pretty straightforward. I mean, direction wise, not much has changed. Aussie CAD, I know it's in here somewhere. Aussie CAD, I'm still bullish on. Okay, Aussie Swiss, I'm still bullish on. Aussie Yen, I'd say be careful on this yen stuff. Oops, get that out of the way. Where'd my trend line go? There it is. That type of trend line structure right there on the Aussie yen. If that trend line breaks, then we watch and see if there's any big shift in monetary policy for the BOJ. If that's the case, then there's obviously lots of selling opportunity here. Again, any type of unraveling on risk, risk on trading or this, low money and negative interest rate territory for the yen. That's a massive opportunity. I think this is what a lot of traders are anticipating. And the problem is anticipating is not as good as confirmation. Sometimes you get lucky when you anticipate, but on a pair like anything yen related, it has been proven over and over again. If you're a forex trader, trade confirmation makes life a lot easier. Okay, Aussie New Zealand. Oh, you son of a 107.70. Dadgummit. Well, um, this stupid currency pair. If it just comes back and chops around, I'm gonna be super annoyed with it. However, I don't know if we're getting, the signs of this to start to break out to the upside. I don't know why in this environment the Aussie would be better than the Kiwi, to be honest. 5.5% for the Aussie or the Kiwi, so that's the New Zealand dollar, and 4.35 for the Aussie. Why would this lead to a bullish Aussie New Zealand? I don't know. Um, I don't know. This is so annoying. I mean, this is such a clean wedge break. It's like, how do you not follow through? One of my favorite technical pairs, and this thing's not cooperating. So I said 107.50 this week. I might consider a stop out. Um, I haven't added anything else to it. I'm just sitting in the trade around 106.25, 106.50. But this position here, I mean, if I am dead wrong, then we're above 108, and that's probably what I'm willing to go to because if this gets back into, if it's just a swap environment and it favors the downside, then we don't necessarily break 108. We just come back up and test and maybe have a range trade. Obviously, I'm guessing. But if we're above 108.50 to 109, and we're talking this, it's obviously I don't need to be long, and so I would go with that. But that's an incredibly frustrating break because I thought it was a clean wedge for once. I haven't traded this thing for months, and all of a sudden it's like, okay, let's take a stab at it. Now it's being invalidated, but I'd say this is where I'm obviously wrong. Anything above 108.50, I need to get out of this trade. Okay. So I'll continue to monitor, but right now upside down about 140 pips on the Aussie New Zealand. Aussie dollar, I'm currently short. CAD Swiss, I'm currently long. CAD yen, watching for this potential trade. If we have a head and shoulders looking for a neckline break. So the gold buy on long call in May, covering April. How's it doing? It's fine. I mean, it's gold hasn't really done anything, so it's just maintaining value right now. But I'm lowering the cost basis, and I'll do it again. So, and I did it so if we have another run up and we get to 210 on GLD, I mean, I should make. Trying to think. Let me see what I'll make. Should be something. Let's see here. Let me go to GLD. Got some alerts going off. 190 call, sell the two. So I'm at the 210. So my break even is $7.30. So if we get to 210, I'll make $12.70 in that position, which is over 100%. So yeah, I mean it's fine. It's maintaining value. We'll see if they get that run into May. Chart Lomanov SLV crossing 2298. Let me put a chart line here. So if we break that low, right there horizontally on the CAD yen, looking for the downside, but I need to see confirmation across the board. Swiss yen, still getting a pullback. I'm short at 169. Euro Aussie, I'm long, or we were long. Sorry, we're not in anything right now. It's pretty choppy. Euro CAD, no trade. I'd like to see this one roll down and go to the downside as our CAD Swiss goes up. Euro Swiss, see. Yen soft is at a run. So next week will be crazy. We're going to have the BOJ on, I think, Monday to Tuesday. We have the Fed on Wednesday. We have the Swiss National Bank on Thursday. Let's go into next week's calendar. So Bank of Japan is going to be Monday night. Rate decision out of the Australian dollar as well. So RBA probably pausing at 4.35. CPI for Canada. You have your FOMC expected to pause on Wednesday. Fed language with Powell will be important to watch. Aussie employment. We have the Swiss rate decision. So we have Swiss rate decision, US rate decision, Aussie rate decision, and Bank of Japan all next week. Enough volatility to get this market cranking. I think that technically a pullback is needed. We've been talking about it for weeks. It's just a matter of getting that thing to roll over and break some of those lows. So to answer your question on the GLD position, yes, if I get it called away at 210, um, if I get it called away, I'll make $12.70 on that per contract. FCX crossing 44. FCX is a copper play. Copper's making a nice run finally. I closed out an iron condor in this last week when it was in the middle. That was close for like $100. So, all right, we're getting some copper action. This is looking more promising too. Copper's at 410. This thing's ripping to the upside. I was looking at some out of the money credit spreads. I think maybe I can treat this a little bit better with FCX. This should be a little bit of exposure on copper. Another one that if we two things, we either get this run where we're finally breaking the structure and heading higher, right? The nice thing is here's a high, and where would we run? Well, if FCX runs to 60 to $68, obviously that's a good chunk of profit. Okay. The other side of that is maybe it's not really going anywhere because we have resistance here and support here, and this wedge is a bit of a mislead. I'm not sure yet. But if I looked at some out of the money credit spreads, we'll see how low I can go. If I can get some positioning here below $40, let's see if I can get some out of the monies on FCX. FCX. Take a look at something. If I went out 40 to 60 days, see if I can get this April 26th. So I could get, this isn't too bad. I can do a 38 by 37. That's not terrible. 38 by 37. I like that trade. I think I'm going to take that trade. 38 by 37 keeps me out of the way. This momentum's been pretty solid. There's room to run for copper. So I think 38 by 37 looks pretty promising at the moment. I could move this up obviously, but I'm trying to keep it out of the way. What do I get if I go 37 by 36? So is this an illiquid position? Let me see. 38, 37 by 36. That's a wide spread. There's no way it's a debit, obviously, for a credit spread. 16 cents. That's a little less favorable, but high probability of profit. Let me see here. That's a 10 delta. Anyway, I'll take a look at that one. I'm probably going to throw in a credit spread there, 38 by 37. Risk reward is not favorable, but probability is pretty high. I might take a stab at that. See if I can get filled. Let me see if I can get filled for 20 cents. Okay, see if it gets filled. Limit. Oh boy, 14. I mean, that's terrible. I'm not taking that. Never mind. I'll come back to this. I'm 20 cents is what I'd like to make, but I go a little bit closer. Man, these spreads are just really wide. Never mind. All right, I won't bore you with that. FCX looking fine. Currency wise, let's go back to our currencies. So we left off on, I think, Euro Aussie, Euro CAD. So Euro Swiss, still staying bullish on this one overall. Euro Pound, still in a box. Euro Pound has not broken here yet. Eventually, this will be a good trade. If we break and go higher, break and go lower, I think Euro Pound has a few hundred pips in for it. It's just a matter of where this level holds. So that's the trade I'm waiting for. Euro Yen, we roll over the right side of the trend line. Lots of sell opportunity if we get it. Otherwise, for those following the trend line, getting a buy trade, going after highs, stop loss nice and tight. I mean, you can trade it both ways. So if you're long with a very tight stop. If you're short, you're waiting for confirmation. Hasn't happened yet. You're in New Zealand, we are long. And we're poking up some fresh highs right now, which is good. So let me check on some posiciones. Let's see here. We should be up We got it in the 77s. Let me check my portfolio here. Euro New Zealand up about 118 pips and counting. Pound Aussie up 29 pips. Pound New Zealand up 141 pips. So those are working out pretty nice. Net position wise, CAD Swiss positive, Euro New Zealand positive, Pound Aussie positive, Pound Swiss positive, Pound New Zealand positive. Those are good. Okay, so running, that's not bad. If we wanted to just grab and scalp, that wouldn't be a bad idea. Just to grab those 100 and some pips in case this thing gets choppy. But I still like the upside. Euro dollar sold off a little bit. Probably need to see this confirmation right there, just kind of right on the edge of that trend line until we go into next week's FOMC. Pound Aussie still holding long. Pound CAD rejecting off of 73. Will this thing hold or break? Not sure. If it breaks to the upside, there's room to 78. We break to the downside, there's a pivot at 67 and a pivot at 1.6. Just it's close. I just want to see a trade, right? I want to see a confirmation that looks pretty good. Pound Swiss, I'm adding on pullbacks. Pound yen, stay out of it. Pound New Zealand, we are retesting highs. This one is another one that looks pretty good for me to get up towards 2.15. So I'm staying long on Pound New Zealand. Pound dollar, pull back into the area that is just kind of a question mark on the dollar index. I'm just going to test my fate next week on the dollar pairs until we get into FOMC. Could regret it, but we'll find out. New Zealand CAD, I'm still holding long, adding on dips. New Zealand Swiss, same thing, adding on dips. New Zealand yen, trend line support. You're either buying the trend line support or you're waiting for a trend line to break. New Zealand dollar, I'm short. That's looking pretty good right now. Dollar CAD, no trade. Dollar Swiss, long. Dollar yen. I got stopped out of the dollar yen with that break above one or that break below 149. We're back up. This is another one that we need to watch for next week. Okay. That level right there, if this is a sell-off potential, setting up a right tip maybe or right shoulder, if we break that level, where it gets really crazy is if we break this trend line and start to head into this open space. Okay, that open space would be a massive sell-off on the yen. Does it happen this quickly? I don't know. I don't know if it's going to be that ridiculous. Any word on Netflix stock? Yeah, I don't know. I mean, it's not like it's adding additional revenue, right? I mean, it could if you have all of a sudden that Mike Tyson Jake Paul fight, and you have more people subscribing for the month to just watch it. But as a subscriber already, it's like, yeah, the live sports events are kind of cool, you know. So anyway, but stock wise, Netflix just hanging in there. I mean, I think it's still a buy and dip. I think Netflix is capable of hitting all time highs this year. If we have a correction, it'd be nice if we have a bit of a broad market correction or the index corrections going into the end of the month. That's great because if we get a chance to see a dip in here, I think I'd like to get long. You know, I'd like to get long and stay long. I mean, we've had a lot of stocks break all time highs. This has had this amazing recovery since the low in 2022. So yeah, it could add subscribers, but does it change price right now at 616? No, I'd rather have a pullback to be long on Netflix versus trying to buy it now. So, and again, I'm using options as Netflix, other than dollar cost averaging and fractional shares. I'm not that interested in owning a $600 stock. So, all right. Um, Financial news, info sources keep up regularly. Sure. So I listen to, let's see, um, podcasts. I listen to Market Huddle quite a bit. Those guys are great. They do an awesome show. Sometimes they have a 30-minute Market Huddle Plus. They do a full long form version, like an hour and a half to 2 hours. For me, I listen to it a lot on my drives. Listen to it at the gym. On Tasty Live, great financial network with Tasty Trade. Tom Sosnoff, Bob Batista, the whole team. They're live literally like 10 hours a day. And also the one podcast I've been listening to is an evening show now called The Price of Truth. Okay, I think Victor Hughes is the host. He brings on a lot of great guests, so those are good to listen to as well. Oh, it's just content. I mean, I don't know. It's it's a tasty evening show. What else? I know Ray Dalio. Yes, you follow him on LinkedIn at all. He posts his newsletters, his changing world order. He posts a lot based on that. Trying to think who else. There's some other ones out there. Those are the ones I'm just thinking off the top of my head. Um, Weiss Capital Management. They have a good podcast called In Search of Green Marbles. Okay. So I'm telling you, like, the only time I have to listen to stuff is like at the gym or on the road. And during my week, I'm on the road enough for, 90 minutes a day that I get to consume a lot of this stuff. So I wouldn't say it's fun because rather than, listening to music and decompressing, it's like I'm just consuming more content. But it certainly helps me, stay fresh with different objectives out there in the markets and different opinions. But off the top of my head, that's what I would say. Good question. Okay, so right now, I'm not seeing anything for a 10 o'clock ask from A1 Trading. So it looks like I'll just be jumping into our room for equities on demand. Let me post this in Telegram right now. So equities on demand, EOD live session at 10 a.m. Eastern time today. And I'm going to do a quick spot check on my robots. Hypertrend this week, wow. This week absolutely murdered it in a good way. 4576 hypertrend up 4,576 pips this week. Wow, that's a big one. 4576 hypertrend. I will take that all freaking day, obviously. Perfect storm. Perfect storm up 279. And perfect storm pro up 360. Yep, so I'm going to double check that one. Shows 368 for the month, but nothing closing out this week. So I'll jump on that one. And then Pockets Pattern Pro. We'll double check those. Cool. Okay. So that's a decent little grab for the week. 4,800 pips. No complaints. And positions looking pretty good. So pound New Zealand, euro, or euro New Zealand up, 100 pips each. So I'm not upset about grabbing some profit if we wanted to take it, add that to the mix. I still like those long positions. So I'm going to try to stick with them for right now. And I'll wrap it up there. Okay. Charlie B. Oh yeah, yeah. Thanks, Donna. You know better than I do. Yeah, Charlie Bolello, creative planning. He's got the podcast as well. He does it with I think Peter Maluk, and yeah, his weekend charts is pretty good every week, like 30 to 40 minutes. He's a good data guy with wide charts. Yeah, he's got a lot of good stuff. Very fact based. Not a ton of opinion. Just data, what the charts show. Go back. He has a lot of great correlations. Yeah, Charlie Bolello is great. Yep. Good. Okay. Equities on demand students to see in 15 minutes. I'm going to take a look at the portfolio and just possibly make some adjustments on MO as we come into dividends. Obviously, getting ready for some positioning this week. We're at 509. We've already sold off a quick, $2 or $3 from an open around 512, and that's totally fine. But we need to see, if the floor is falling out a little bit. Again, just go back to this Nvidia gap. That's 503 to 498. So if we're going to start to see some pressure to the downside, I'd say we get after it a little bit. But we'll have some more. We're giving ourselves some time into the 22nd, 28th. I'm gonna take a look at that kind of quadruple double diagonal today in equities on demand. See if we can price that out going into next week's trading. I'm probably not going to take the trade today. It seems like we're going to have either a volatile day or a choppy day. I'm not really sure, but maybe by end of day, if it's cheap enough, I might take the stab at it. It'd be nice and centered going into next week, and then going into Monday's trading. We will see what the market gives us. Arm rehab, it's going well. I got physical therapy today. I started hitting golf balls this week, lightly, like chipping around, starting to make full swings at like 60 to 70% power. So I'm trying. I mean, I don't know. I'm just trying not to worry about it, but I'm doing intensive rehab at least every week and trying to stay proactive until I'm back to 100%, maybe another month. But thanks for asking. Okie dokie. I'll see you in a little bit for the trading room. And thanks for being here today. If you're watching for the first time, obviously the community is growing. Like and subscribe, all the good stuff. And this is where you can find me. So I stream this session Mondays and Fridays. I post this on. This is on LinkedIn. This is on Facebook. This is on X as well, Twitter, right, and on YouTube. So yeah, look at all you guys. Just you know me so well. Yeah, Players Championship this weekend. Yeah, I'll check out some golf. Got it all DVR'd. Cool. All right, thanks for being here, everybody. I will see you in the trading room, and Hyper Trend traders will see you this afternoon at 1 o'clock. It's been a good week, so we'll chat about that and talk to you soon. All right, thanks. Bye.